CRSR is in the move, up 60%. This is Friday, the 13th of February 2026. 50 average is usually 1.8 million shares, and that's an indication that it might be it's its float, its effective float is a tiny one, so some people might be considering it a low float stock. Okay, it's the company reported earnings outcomes. They were not bad at all, not that bad. Okay, before we see the technical analysis, let's see what we have here on its daily chart. Okay, this trend it is showing right now is within a longer term bearish trend. Its 200-day moving average is looking bearishly lower. The extrapolation of its 3-day moving average is saying that the strength might remain in place up till Wednesday, the 18th of February. After that, we are looking at the prospects of a contraction towards the 25th, and then from the 26, it might attempt to resume the uptrend, and it's saying that it might hold it up till the 26th of March. That's a long time to come. No guarantee that that will be the case. Okay, momentum is equally expected to remain elevated at least up till Friday the 20th. Okay, so let's see what we have. Yeah, the stock is now at some around 7.23 now, up over or close to 60%. Critical observation: price has blown through all resistance levels. Yeah, based on the market grid. Okay, the market grid shows maximum resistance at $5. Yet the stock is at 7.25 with or rather, this is close to more than 40% premium above the highest market grid resistance. The market grid gives us a range of prices it has a potential to trade within, but it has blown through all of them, including what we have on its 4-hour chart. So key technical inferences: extreme overextension, price trading 40% plus above 200-day moving average at $7.74. Is that the case? Let's see what we have. No, it has pulled back from that level, from that moving average. Okay, 31% above that 10-day moving average may or may not be the case. Okay. Okay, yeah. We have price pressure momentums. They tell us what the moving averages are doing. We have the 10-day, 21-day, 40-day, and the 200-day. Okay, they tell us if they are how much they are appreciating or depreciating. Okay, so 10-day moving average is gaining $4.39 every day. 21-day, 1.4. 40-day, 53 cents. 200-day is not even, is it flat? Okay, saying it's flat. Okay, so this is also the implication is also that positions open from 10 days ago all the way to, I would say, 200 days ago are currently in profit. Okay, so they are derivatives. Some of them are okay. The first derivative is negative on the 10-day moving average, losing momentum, turning bearish. Okay, yeah, that derivative is turning bearish. Okay, and the first derivative on the 21-day is also negative. Okay, weakening. And the first derivative on the 40-day equally bearish as well, neutral but deteriorating. Okay, so yes, I mean the stock has been struggling to maintain the highs it has printed so far. Yeah, so it's not out of place. That's what's going on, and it hasn't erased the bearish yeah, the bearish data on them. It was bearish before, so selling pressure was very much in effect. So it's still trying to erase all of that. That's also what's going on amongst other things. So despite today's explosive move, the underlying moving average structure is still deteriorating. Yeah, still weak. Still, yeah. I mean, this is just one day. The price pressure momentums haven't caught up to the price action yet. Yes, that's true. That's true. Yes, yet to catch up sufficiently. So this is still yet to bleed out the negative, the bearish, bearish reality, if you like. Yeah, yet to bleed out the bearish effect. So market greed. This is yeah, this is what we have as well. Yeah, this market grid, yes, it gives us a range of possible prices. Okay, so the stock is at a premium to all of them now. So there's the probability of trading back 85 to 90%. Yeah, that's for $5, 4.9, 90%. Mean reversion likely 4.79, 92%. While the algos on this on Claude are extremely negative. Yeah, trade setups not recommended at all. Entry will be right around where it is right now, and your targets will be 5.6 to 5.8. Second target 4.9 to 5.1. Stop loss it is if it continues, if it defies this pullback, impending resistance and advances towards 8.5. Okay, the rationale is extreme overextension with no technical support until $5. Deteriorating price pressure momentum derivatives indicate momentum is already fading. High short interest could provide one more spike, but odds favor mean reversion. Revenue guide below 2025 plus semiconductor headwinds equal to fundamental ceiling. Probability of profit to 70 to 75%. No guarantee, and no. This is also not a recommendation, and indeed also this long term setup. So tier one entry aggressive will be around 5.5 to $5.8. Probability of reaching is okay. Yeah, this is still this is for reversion. Yeah, this is for reversion, still reversion as well. Okay, so this is for continuation. Okay, so 7.5 to 8, $7.5 to $8. Current resistance becomes support. Okay, your target will be $7.7, $7.5 to $8, $9 to $10. Okay. Okay, so this is by the reversion rather. This is when if it does a reverse, if it does reverse, yes, yeah, if it does a reverse, yeah, that's what it's saying here. Okay. So rationale is fundamentals improving, debt reduction, buyback, DTC growth, margin expansion, memory price tailwinds are real and multi-quarter. Short-term creates volatility, but also buyback opportunity for the company. 2026 guide conservative, but could see upside revisions if components stabilize. Current spike creates future support zones. Optimal strategy near term this week. Profitability probability strongly favors 60 to 80% retracement of today's move. Avoid FOMO. Avoid FOMO chasing. Short exposure or put spreads have 70% plus edge. Accumulation phase 2 to 8 weeks. Build position in tranches at 5.5 $5 and 4.5 levels with 80% to 70% and 45% probability of reaching respectively. Hold thesis 6 to 24 months. If fundamentals continue improving, watch Q1 2026 earnings. This could be a legitimate turnaround story worth $8 to $7, but it needs time to digest this move. Key risk factor, biggest wild card is short squeeze continuation. If short covering accelerates, currently high short interest noted, price could spike to $8 to $9 before the inevitable reversion. Use option strategies, yes, rather than naked shorts to limit upside risk while maintaining a downside exposure. Bottom line, this is a classic spike and fade set up with 75% probability of 25 to 35% decline within 10 days, followed by potential value creation on re-entry for patient capital. Okay, see what you make of CRSR, and thank you very much for watching this video.